If you're an active trader looking to increase the amount of money you trade with, I have urgent news. You can get $5,000 or more for your trading account. The hardest task an active trader has is to manage cash flow. Without using every technique available to earn a profit, you can quickly run out of funds to trade with. That's why Traders Accounting put together an eye-opening, easy-to-understand, 11-part video series about the business of trading. These videos cover what every successful trader needs to know, such as what business a serious trader like you needs, the best way to set up your trading business, wash sales and capital loss restrictions, business expenses you may not have thought of deducting, what mark-to-market is, and efficiently trading your own retirement money. These free videos show you how to get an IRS subsidy of $5,000 or more every year just by trading. It's easy to get our free videos, too. It's quick, easy, and safe, and there's no cost or obligation. Thank you, and we'll see you on the next page.
Buddy Hartman.
Hey, buddy, it's John.
Hey, John, how are you?
Good. How you doing?
I'm doing fantastic.
I'm just introducing myself to the audience here, but good that I'm glad that you could get on the radio here and talk some taxes with us today.
I'm glad to be here. Thank you for having me, man.
You've been in the tax business for a while.
Since about 1997, I've been working with traders, so it's been a fun ride. It's one of my big passions. I love the market, and it's a great niche for taxation.
All right, excellent. You started. I've met you. I think the first time was down at one of the trade shows. So yeah.
The New York City Trader Expo last year, yeah?
Yes, Trader Expo. So we got in touch with you, and things have come to this point where actually I talked to you on the phone the other day, and you had some great things we were going to talk about. Let's start off. Your website's Hartman. Let's go over that again. What was that?
HartmanCompany.com.
Hartman Company. With two
all
N's.
One word. So 2 N's and Hartman, www.hartmancompany.com.
All right, and we got a lot of, I kind of threw this out to the audience, so we got a lot of questions, but I know we had a kind of a little format for today. We were going to talk about some important questions that every trader has. Everyone has these same questions, like, what is trader status? What is mark-to-market accounting? What's the wash rule? Entities, should you be incorporated? I mean, these you must get this question. Are these the most?
Those are 5 basic questions that come up continually when you talk to a trader. And the way that I always do it is, first and foremost, trader status is always step number 1. When I do seminars, when I teach about trader taxation, I like to do it in steps. And step 1 is clearly always going to be trader status. The IRS, they're not very good at giving our traders any kind of guidance. It's not codified. And what that means is it's not an IRS code. There's nothing in there that'll say, hey, John, read this. If it applies to you, you are a trader. A lot of it is handed down through the courts over the years, and they come up with specific tests. And, one of them is a 2-pronged test where the trader's activity must be substantial. And then the trader seeks to profit from short-term swings in the market rather than long-term appreciation of holdings. But if you look at this, right, I mean, on the front of it, it looks okay, but substantial in these court cases mean a lot of different things. And the trading, does it mean trades? Does it mean gross proceeds? Does it mean the amount of time you put in?
Yeah.
All of these come to trader tax status.
Is this defined anywhere?
What we do have from the IRS is it's publication 529, chapter 4, and I believe is a page and a half for our traders. And that's what the IRS really gives us. Other than that, It's basically looking at court cases. They provide general characteristics, but they do not give you a hard and fast rule of if you do 500 round trips a year, if you're doing it full time, if this is your only employment, then you're a trader. They don't provide that. So it is a gray area.
Yeah. So, but you get this a lot. And how do you? What's the first thing a trader does? How do you know if you fall into the category? And is it a benefit to have that? I mean, what's the big difference between trader status and? I'm going to be asking you basic questions. A lot of traders ask me.
Yeah.
What's the big difference, and why is it so important to have trader status?
Okay. Well, to me, first thing and foremost, trader status is a huge differentiation between being an investor and having trader status. You're severely limited on the investor side. So let's assume that we've got a trader, we got two people. One qualifies for trader status, and we'll go over that in a minute. The other one's an investor. On the trader status side, once you achieve trader status, once you apply all those characteristics and they apply to you, that treats you like any other ordinary business. So that opens up all your ordinary and necessary business expenses that you can deduct. Your margin interest is now deductible. Okay? Mm-hmm. Your home office, all your trading data feeds, all your related items, supplies, auto in some cases, travel, your seminars, going to the Trader Expo convention, all of these become write-offs.
Write-offs.
Your chat room for daytradingradio.com, fully deductible. Take a quick look on the other side. I know I'm going through this quick, but we don't have a lot of time.
Yeah.
If you look at it on the other side from an investor, investors are really only allowed to write off mainly, data feeds, investment-related information. So if they're taking a seminar and they pay a lot of money to go to one of these schools to take a seminar as an investor, your class time's not deductible. You can write off the books because they're providing information, but that actual class time, it's non-deductible. The other thing is, when it comes to traders, a lot of your expenses are not limited. As an investor, we're going to put those expenses on a Schedule A. They're going to be unreimbursed employees, not unreimbursed. They're going to be down in the itemization of 2% of your AGI. So there's a limitation right there. If I have a trader and a wife, and they're making, say, $100,000 a year, that 2% means the first $2,000 of their trading expenses are non-deductible. Anything over and above it will be deductible.
Wow.
Then the next step would be, especially for us in the Northeast, New York, tri-state area with high tax, state taxes. If you run into the alternative minimum tax, which can easily happen for families, $150 and over, all of those expenses, your investment expenses, are a complete add back, and you get zero for it.
Wow. I mean, it seems way complicated.
Don't get me wrong, trader taxation is very complicated, but again, it's the step number one is trader taxation. If you can pinpoint it, make sure that you meet those characteristics.
Let me ask you one question on it. What's the biggest requirement for day traders? Is it the amount of trades you do, or is it your overall?
To me, it would be. In the end, it will, I believe, always come down to your trades. Everything else is building the case for trader status. But if you're very light on your trades, then I think you'll have a hard time. For a mature trader, I'm looking for 3 to 5 round trips on average per day, if not more. Okay, and I say on average because you don't always have your entries or your exits in a particular day, and one day may be much better than the other.
Yeah.
So it really comes down to trades. If you're a beginning trader, I think you can slip under those numbers, but not for a very long time. 1 round trip in the beginning, getting up to 2 round trips, 3 round trips. I mean, you really should be somewhere around 3 to 5. I like to see it 5 and plus. 5 and plus, full-time, consistent trading, and especially if it's the only thing you're doing, I think that you don't have a problem.
Now, is this something that gets flagged that very easily? Like you try to put in that, you apply for the trader status, and the next thing you know, they're calling you out on it. And I mean, does this happen, or is this something that people just can apply for, or do you have to send the records in?
This is a great great question, because a lot of people have the misconception. Trader status is clearly not an election. It's not something we send to the IRS. If you meet characteristics of being a trader and we think that you qualify as a trader, all it is an application. So we would apply it to your return.
Nice.
So if I have an individual trader, he's got a retail account, Charles Schwab, TradeStation, whoever it may be, and he's trading, he's doing enough trades, he thinks that he qualifies or she qualifies as a trader, it's as simple as then your expenses are opened up, put you on a Schedule C, and you're able to write it off.
Wow. And there's a lot of stuff you can write off.
There's tons. I mean, you have to really think about yourself as a business. Once you achieve trader status, I'm a business. So that means everything can be written off as long as it's got a business purpose.
So then would the next logical, the next logical thing is, do you need to set yourself up as a business?
Well, when you say business, you mean entity.
An entity.
Correct?
Yes.
I mean, to be honest with you, this is one of the questions. I've got beginner traders who'll call me up, and right away they're like, I need an entity in order to be a trader. And the answer to that is no. We just talked about it. You achieve trader status, your default is a Schedule C. Okay?
Mm-hmm.
The one reason, or there's a number of reasons why we would then step up to an entity. Okay? And the main reason is this. If I'm a trader and I make $100,000, John, you're a consultant, you make $100,000, right? Our trading is short-term, it's taxed at our highest ordinary rate. You're consulting, taxed at your highest ordinary rate. The only difference there is that, John, you're getting hit with 15.3% for self-employment tax. Thanks to Congress, our traders, Forex, equities, options, anything, they're not subject to 15.3 at all. That's a savings on $100,000 of $15,000.
Wow.
So, because of that, our traders then can't deduct their health insurance, and they also can't do any retirement planning. So those are the two main reasons that I would put you into an entity. The reason that we would put a trader into an entity is because then they can pay themselves. And when you pay yourself, you're creating the earned income to then get the additional benefits.
Yes.
Remember, we can already write off most of our trading expenses just by achieving trader status on a Schedule C. We can get more complicated and more complicated, but I think for our time today, to really step up to an entity, there's got to be a few things. Schedule Cs, it doesn't matter if it's a trader or not, they're always going to be under more scrutiny than an S-Corp, than an LLC. So that's another reason we might put a trader with low trades into an entity. Pulls them out of a large audit pool and Schedule Cs into, say in New York. You go into an S-Corp or an LLC in New York, you're going to be a small fish in a very big pond.
Yep.
So that's one other addition. And then the other for the entities is not just the trader, but now I can get involved partners, a wife or a husband, as long as they have some kind of duty inside the LLC, then they can also get those added benefits. We can write off their medical. We can do retirement planning for them.